Why are stocks like Titan, Nestle, Jubilant Foodworks trading at a P multiple of 40 plus? Is there a bubble there?
Well, I think in some senses people believe that the retail market in India will be very good, and uh, that's the reason why all these companies are, uh, trading wherever they are. A company like Nestle has always traded very, very expensively from the time that I have known the company. Uh, Titan and Jubilant are really speaking, well, not technically. I mean, they are very different businesses, but they still ultimately access the consumer. Uh, they look frightfully expensive, as far as my line of thinking goes. But then, market has to find to overprice something. Maybe it is finding a few stocks like these to overprice.
Do you think these stocks can enjoy a premium P multiple for an extended period of time?
See, when you keep buying something which is expensive, ultimately you have to lose. I mean, that's an inescapable law of markets. That Educom was a good case in point. While definitely in no way comparable to Titan as a quality of company, Titan is obviously a far superior company. But the fact is that people are paying 60, 70, 80 times earnings for these kind of companies based on sort of the growth on education, etc., etc. The fact is that earnings have gone up, but the multiples have kept contracting. So, when you just simply bet on the multiple holding up and therefore the stock price has to keep going up, then you are running into very, very shaky territory. So when you're buying something 40 times earnings, even if you are going to see earnings grow 25-30%, what might happen is the stock prices remain flat, the earnings go up, so the multiple keeps contracting.
Are PSU banks looking cheap?
They have always been cheap. They are looking even cheaper now. But again, I see no big trigger there, to go out and pound the table and buy them. And I have been saying this many times. It's hard to find those opportunities in vast abundance in the markets, right now.
So what could be the turning point for Indian markets?
I think we've already turned.
But how will we turn on the upside?
I think we have turned away from the from the highs for sure. We flirted briefly with the 2007 or 2008 January highs, and I think we have turned away very conclusively. I doubt if that move down is over. Like I said, it's not going to be a fast market, which is why it's a very boring market. It's going to be a slower, more tedious, more grinding market. It's a battle of attrition. So I think that one has to play itself out before we have a meaningful bounce back from here. And I think just the local environment is very, very negative, extremely negative. Capex cycle is down, investment cycle is down. GDP numbers will obviously come in below what most people thought at the beginning of the year. The rate cycle is, not looking too good.
Name 3 companies for us where you're confident that the business cycle is looking strong and you are just waiting for a bad market day, maybe a 10% decline, maybe a 15% decline, but you're convinced that you want to be a buyer there.
No, like I said, the entire pharma pack, why 3 companies? There are probably 10 companies there.
So do you like all 10 large companies?
I mean, we have had a buy on it for the last 2 years, and they've done very well. Obviously, they have declined also in the market fall, but at least that's one area where you have both the thrust of the export story, the big global generic story, as well as very strong domestic consumption story. So
aren't they expensive?
Yeah, but that's the whole problem with this market. The good ones are expensive, the bad ones are getting cheaper, but you don't want to be buying them. But yes, what I do believe is in the next 1 to 6 months time, you will see the small cap end of the market start to outperform, because I think there a lot of stocks have become very, very cheap. I will not take names, but I think the small cap might well lead the next rally rather than the large cap stocks.
So just to put it on record, what do you like from the small cap space?
No, like I said, that I will not take names. I mean, whatever we cover is already out in the public domain. But what I'm saying is that there are a lot of companies, and I am meeting a number of them almost every week. The companies are making 20-25% return on equity and are trading at book or below book value, where at least based on whatever our analysis is, that those companies will grow for the next 2 years, which means they're trading like 1 or 2 times earnings 2 years out. I mean, those kind of valuations are unlikely to sustain. So I think the big boom will happen obviously in the if not the sub 500, definitely in the sub 1,000 crore market cap category. That's the area I would really be focused on right now.
You track Ranbaxy also with a magnifying glass, and of late the news flow for Ranbaxy has not been strong. Do you think, given the way how US FDA of late has moved, the Lipitor opportunity could really turn sour for Ranbaxy?
That's a problem, or that's a possibility. But that's a risk that we have kind of always dealt with in Ranbaxy. We can't say for sure that which way it's going to go. But when you buy Ranbaxy, you're obviously cognizant of that risk.
Why is that you don't like Cipla?
It's become relatively sort of staid stock, an aging stock, if you will. It's a great company for sure, but I don't think it has enough fire in the belly now.
So between Lupin and Reddy, which is a better pharma company to own, or better pharma stock to own?
Both are great. I mean, I think Lupin is a terrific company, and so is Dr. Reddy's. On a good day, I would be buying Lupin. On a bad day, I'd be buying Dr. Reddy's. So I think both are just fine.
Are you mindful of the beta pharm risk what currently Dr. Reddy has to deal with?
Well, that's been the risk for. I mean, even Lupin has made acquisitions. We'll see again for pharmas. That's been the big risk factor, that they have bought companies. Sun has bought Taro. I think that if they've learned from the past, then they will manage these risks a lot better. So I'm optimistic.
Now, I don't want to get this one wrong, but correct me if my assumption is wrong. Your top sectoral pick right now is pharma, and within the auto space, on a decline, you're bullish on Tata Motors and Bajaj Auto.
That's correct. Absolutely right.
On a personal note, do you like this reputation of being called a big bear?
I don't think I'm a big bear. I'm a realist, and that's what I keep. But frankly, it doesn't bother me. I mean, my job is to get markets right, whether being.
You've never enjoyed a reputation of a big bull, so it's always been the big bear for you.
Well, if you go back to history, then buying a fixed deposit in India has always been more beneficial than buying stocks. So, for most investors, stock markets have never made them money. It's made me money, but I'm not representative.
But coming from a broker that equities don't make money, it's rare.
I deal with institutional investors, and it's for them to take those bets. I mean, that's not for me to tell them what to do.
Shankar Sharma has created wealth for himself and for his family and value for others. So what's on your agenda now?
Oh, you mean personally?
Personally?
No, personally, I'm headed out of town for quite a while to come. So I'll see you guys in the next few months' time.
Well, we'll leave it there. Good luck and thank you for joining us on ET Now.
Thanks, Nikhil.